Joining me right now is Potomac Wealth Advisors founder and president, Mark Avallone. Mark, thanks for joining the conversation. What are you expecting from the PPI, and do you think markets react to this number this morning?
Good morning, and I think we are going to see continued inflation pressures. These supply chain disruptions are going to impact this number. I don't think it's going to be a surprise because it's been a headline. It's a topic you're covering in detail. So I don't think there's going to be an overreaction to it, but I think we're going to see a big number. I think the real number is going to be later with the Fed and what they're going to do with their tapering program, the number they come out of there. So there's a lot of inflation watch, a lot of Fed watch, and I think that's another reason why the markets are a little choppy and in a holding pattern this morning.
Yeah, I mean, no doubt, Treasury yields are also reacting. They're inching higher this morning, by the way. I had the Federal Reserve's two-day monetary policy meeting. The Fed kicks off that meeting today on this day that we're waiting on the PPI. No doubt inflation is going to be number one on their agenda. What do you expect from the Fed in terms of the beginning of its tapering back program of all of that stimulus? How many rate hikes would you say are priced into the market in 2022?
Well, the Fed's in a tough position. It was only at Jackson Hole in September, late August and September, the tone was we're all for liquidity. There's no tightening from the Fed. And now here we are 3 months later, and they have become almost hawkish. So they're going to have to follow through on some level. And the market's pricing in an increased bond buying from the initial 10 or 15 billion. Now it's looking more like 25 or 30 billion a month. So if Jerome Powell and the Fed don't follow through on that, I think it creates more confusion. So let's get this started. It's needed. Inflation is clearly here. It's clearly out of control in some sector. So let's have a focused program, begin the bond buying program in earnest. As far as rate hikes, that's a different story. I think the bond buying tapering is going to slow the economy down. It's going to reduce liquidity. We're going to have less Fed stimulus next year. We have higher oil prices, higher regulation. We may have higher taxes. I think we're getting premature when we predict how many rate hikes we're going to have next year, because frankly, I don't know if the economy is going to be strong enough next year to handle rate hikes.
Wow. So you don't think the Fed really has a plan in terms of a couple of rate hikes? We got to see how this pullback in the stimulus impacts the broader economy. I know things have slowed down quite a bit from the expectations we had for year end earlier in the year.
Yeah, we're going to see GDP numbers come down markedly from where they are. We're looking at slow GDP numbers, wage growth slowing, inflation slowing. It's a global economy, and not all the other economies are going to steamroll ahead. Europe is mired in problems. COVID didn't fix their slow growth world. COVID didn't fix global aging populations and a lack of technological innovation in those countries. So I think we're going to have slower growth overseas, and the Fed tapering is going to be a headwind at home. When one variable changes, it has an impact on other variables. So I don't think we should expect a straight line of growth here at home.